You probably know that Bitcoin made a new all-time high at 73K slightly over a month ago now. It has since seen a couple of dips down to roughly 60K or so, with the recent shed attributed to escalating geopolitical tensions. By the time you're watching this video, though, we're knocking on the door of the halving, so who knows what the market has done by then. Nevertheless, this is the first time Bitcoin has made a new all-time high prior to the halving. You may start to hear or think that this time is different due to the introduction of US spot Bitcoin ETFs and the inflow of institutional money, not to mention Hong Kong has also just approved spot Bitcoin and ETH ETFs on Monday this week. And while these are undoubtedly major bullish catalysts which opens access for institutions and retail alike to pour money into the asset, it does not mean that these buyers will not sell to take profit, rebalance portfolios, or are immune to panic selling. A recent analysis has even shown that the average trade size on BlackRock's IBIT is 13K, suggesting that the main driver of ETF buys are actually from retail investors rather than institutions.
It doesn't have to be a currency.
Runes are also one of the latest developments in the growing Bitcoin ecosystem. It's essentially a new protocol and token standard for fungible tokens on Bitcoin, which improves on the current BRC-20 standard and is created by Ordinal's creator Casey Rodarmor. Runes will activate exactly when the halving occurs. After an impressive bullish run from as early as the start of 2023, is the market finally showing signs of short to medium-term weakness? Let's consider some of the potential headwinds. US inflation ticked higher for 2 consecutive months now, from 3.2% in February to 3.5% in the latest report for March. This means that the Fed will likely not be in a rush to lower rates, though they are still sticking to the plan of 3 cuts this year. The next FOMC meeting is in May, and we'll just have to see what happens between now and then. Some investors believe that it would be impossible for the Fed to get inflation under control without triggering a recession, and the New York Fed puts the chances of a US recession in the next year at 58.3%. Something that no one seems to be talking about now is yield curve, which remains inverted. Historically, inverted yield curves have correctly predicted the last 7 recessions. However, it's worth noting that these things can take a long time to play out. As for Ethereum, it's been an exciting past month, both good and bad. It successfully rolled out its Den-Kun hard fork on March 13th, and as promised, Den-Kun has successfully lowered gas fees on top L2 networks like Arbitrum, Optimism, Starknet, and Base, whose gas fees have mostly fallen by over 90% to about a few cents per transaction. This was followed, however, with some unwelcome news, as headlines revealed that several companies that had dealt with the Ethereum Foundation were facing scrutiny from the SEC, a news story that has apparently gone under the radar since late February, based on a commit message posted to GitHub that stated the foundation had received a voluntary inquiry from a state authority that included a requirement for confidentiality. Fortune reported that the SEC was waging a campaign to classify ETH as a security. Little else is currently known about the scope and focus of the investigation due to the confidentiality requirements from involved parties. The news had dimmed hopes for the approval of spot ETH ETFs in May, though BlackRock CEO Larry Fink has come out to say that Ethereum could still get ETFs approved even if it's classified as a security. With the US spot ETF deadlines fast approaching in mid-May, we'll have to see if he knows something that we don't. One major development that we've been watching for weeks now is ETH's relative weakness to BTC at the time of shooting. Since our last update, ETH has not only given back the gains of its previous bounce against BTC, but has broken down on its long-term support level, dropping to levels not seen since April 2021. This has naturally coincided with a weekly breakout on Bitcoin dominance, which may be a forewarning of altcoin weakness across the board, as many are also starting to break down on their BTC support levels. Regulatory crackdown in the US intensifies, not only with the ETH Foundation, but Uniswap, which was served a Wells notice by the SEC, KuCoin, which was charged by the DOJ, and Terraform Labs and Do Kwon convicted of fraud. But on the brighter side, the space continues to see traction in capital inflow, as shown by the fact that global crypto investment products have crossed $100 billion in AUM and VCs and projects, which continue to raise funds. As you can see, a lot has happened in the past month or so, to say the least, but that's all the time we have to cover in this video. Have your normie friends or family started asking you about crypto? Let us know in the comments.